UK inflation has hit another new 40-year high. The uplift in prices shows no signs in letting up, with the strain on household budgets beginning to show across the board. Let's take a look at the figures. The consumer price inflation hitting 9.4% in June, up from 9.1% in the previous month, slightly ahead of economists' forecast. However, core inflation, this is the element which strips out volatile food and energy prices, which is where much of the uplift in the inflation has come through from. That fell back slightly to 5.8%, so that's a glimmer of hope. The retail price index ticked up marginally to 11.8% from 11.7% in May. That was absolutely in line with expectations. So surging fuel prices at the pump was the biggest contributor to higher inflation. Petrol prices rising 18 pence over the month, the sharpest increase since records began back in 1990. The figures are likely to pile more pressure on the Bank of England to raise interest rates. We're hearing recently from the governor, Andrew Bailey, to suggest that we should expect 50 basis points when the bank next meets in a couple of weeks' time. Let's take a look at what's happening with sterling. It's up today against the US dollar. In fact, it's showing a slight pullback from the highs, but nonetheless, it is holding on to recent gains. Much of this is as much dollar weakness as it is enthusiasm to buy sterling. So let's take a look as well at sterling, what's happening against the euro. And we're down now there from the recent highs. We're down at levels not seen since the 7th of July. Expectations are the European Central Bank is going to deliver a 50 basis point rise when it meets this week to discuss interest rates for the Eurozone. So that's why sterling is down against the euro. But I think the pullback in core inflation is interesting and has something to do with possibly this like pullback in the price of sterling.